Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Friday, September 25th of 2020. You have Friday Insights edition, and we're going to talk about topics that markets are paying attention to, therefore we're paying attention to as we manage our clients' wealth here at Blanke Schein Wealth Management. Let's get right to the topics of the day. So our first topic of the day is Congress is back at it with regards to the CARES 2.0 Act. In fact, specifically, the Democrat-controlled House of Representatives. They claim that they have the support of a $2.4 trillion CARES 2.0 Act, if you will. Now, remember, if you recall, they've agreed to disagree over the last 3 or 4 weeks. That has brought sort of what we saw in the markets, the equity markets, play out of taking it negatively in stride. So we saw a sell-off in the equity markets, part in due to Congress basically not following through on what has been heavily anticipated aid that's been needed for the government assistance for enhancement unemployment benefits, to service industry, to the airline industry, to small business extension of the PPP. There's a lot of facets of the economy that still need help. And they're looking for Congress to actually come together. Now, the Republican-controlled Senate has to sort of make a deal, and they originally were at $500 billion, worked their way up to $1 trillion. Now, rumor has it they're up to $2 trillion. Regardless, this is how the sausage making happens in Washington, and ultimately, hopefully, they come to some sort of consensus of aid, assistance, and literally direct support for those that need it right now, because there's sectors of the economy that still need tremendous support. So we'll see how this plays out. Don't hold your breath, because that could be dangerous as we wait for Congress to sort of agree on what looks like another CARES 2.0 Act. So our next topic we're going to talk about is this 1999? A lot of the tech sort of names have run well past sort of valuations, if you will. And so that has a lot of Wall Street last 2-3 weeks concerned. Is this a 1999 bubble? When the reality is that if you look underneath, in 1999, we actually had corporations that were tech companies, a tech bubble, if you will, that really didn't make any money. There was sort of a lot of hope and anticipation. But today, fast forward, almost 18, 19, 20 years later, you have companies that are making billions of dollars a quarter. So we have real earnings. So there's a real difference from what 1999 was, which is a hope and a prayer in the bed of technology, fueled by ultra low interest rates, again, in terms of sort of accommodative monetary policy. Back then, interest rates weren't as low as they are today, but monetary policy was super, super accommodative, fueling that sort of internet bubble back then. So today we look at internals such as sort of 5 important topics. Now keep in mind here at Blanke Schein Wealth Management and Hightower partnership that we have access to all the resources and research that is available all in the street. We're not beholden to one investment bank. So we do have investment bank research that we have access to every single day from Barclays, Goldman Sachs, Deutsche Bank, Credit Suisse, Citigroup, Stifel, Jefferies. But we also have Charles Schwab, Pershing, Fidelity, JP Morgan, Guggenheim, and also the Independence, Strategis, First Trust, and a few others. So we have over 50 plus resources on a daily basis that we have all access to. And that is an unvarnished, true, transparent, clear view that we get to sort of articulate what's important, what markets are paying attention to, right? The daily updates that I provide for you, we get from all of the access to this research that we have here at Blanke Schein Wealth Management. It's invaluable. It's really helping our clients, us at Blanke Schein Wealth Management, achieve success for our clients as we go through access to this information. So I don't want that point to be lost. But another thing key sort of I've curated through the research that we get on a daily basis is the sort of key points that I'm going to talk about today right now in this moment in time that we saw sort of negative headlines build up in the equity markets. Equity markets are building and testing moving averages 50-day and somewhere in the 50-day to 200-day. But is it something to be cause for concern? Well, there's 5 key important things that we're watching based upon the research that I just reported on that we have the access to that really sets the table as to this is sort of a healthy rotation versus a larger correction. One of the key first topics is the credit conditions right now. So the status of the credit markets, I report on it on a daily basis, not cause for concern. We specifically look in the high yield market. Now those things can change overnight. It could change over the weeks to come. But as of right now, we're seeing as the equity markets pull back, the credit markets are still intact. So if it's a credit-led sort of sell-off, we'll see the equity markets follow. There's a divergence there, so it's a positive in terms of that, sort of a healthy correction and rotation that we're seeing in the equity markets. So that's also tactical indicators that we're taking a look at. I can get too technical on these, but this is something that we're paying attention to. Also, put-call ratio. That's another sort of healthy, sort of inline indicator that we have on our dashboard. The VIX curve is something I want to talk about. It's a sort of a risk a barometer on our dashboard. So as the VIX volatility index rises, it's an indication of pressure in the market. And so that also indicates that there's more, the higher the VIX gets, the more persistent if it stays high, the more selling we're going to see. So selling begets selling. We saw selling in the last few weeks in the equity markets, testing some moving averages. S&P is about 3150 range is sort of where you want to see it to hang out. And then sort of, sort of catch its bid, and we can see sort of opportunities and people on Wall Street sort of pile in on a go-forward basis. That's playing out right now. But that being said, the VIX is also not falling, or excuse me, as the market falls, the VIX is not rising. So it's that red light dashboard indicator that we keep an eye on. And what's more important is that the VIX curve right now has shifted, meaning the month of October, the pricing volatility from the VIX indicator for the month of October is in line. Actually, it's lower than expected average right now because of the uncertainty of the election. We would think that the VIX would jump. It's not. When is it jumping? We look at the November contracts. That is jumping tremendously. What does that mean, Rob? Ultimately, that traditionally before an election, you have the VIX rise because of the uncertainty of the outcome. Right now, the uncertainty of the outcome is being pushed to November, which says one thing, a contested election. The markets are betting that we will not have answer on November 3rd. Again, tune in to next week. Stephanie Link from Hightower and CNBC is with us. She and I are going to have I'm going to interview her as to the Election 2.0 call. I want everyone to like and subscribe to our Facebook page. Also, this is our white paper, portfolio positioning. We're doing this for our clients right now on Blanke, Schein Wealth Management. It also talks about all the scenarios that could potentially play out as it relates to that. We're going to talk to Stephanie in terms of the election next week. And again, keep in mind, next week on the 29th, we have the first presidential election debate. That's going to be exciting for everyone. So grab your popcorn and watch that play out next week. The next day, we're going to have Stephanie here in terms of portfolio positioning and sort of analysis. But the VIX index right now is positioning a November delayed outcome, which is interesting, right? But that's 2020, so it's totally expected. And finally, the dollar, it looks like a rally that's a mean reverting to the mean, which means we're having the dollar sort of rally back to catching a bid as it's fallen the last month or so. And so now it's just basically going to work back to sort of next couple of weeks. We'll see the direction, but the direction seems to be up for the US dollar. So those are 5 things that are sort of positive in the line of what we're paying attention to here at Blanke Schein Wealth Management. Again, happy Friday. Thanks for watching. Again, election is in front of us, and so we have everything election here at Blanke Schein Wealth Management. If you have any questions, we're here for you. So thanks for watching. Have a great weekend and enjoy your day.